Inflation Nation, cooling down as the weather warms. Hey, this is Dave with Bolduc Realty Group. Welcome to my weekly real estate market update. Today is April 14th. Happy Friday. Before we talk about what's going on in inflation and how it's impacting the Connecticut real estate market, please like, subscribe, ring the notification bell. Comments and questions are always welcome. Throw them in the comment section down below. Let's talk about key Connecticut stats right now. Active on the market, 3,569. Up from last week at 3,394. That's up 175. This is good news. This is the inventory pop we were looking for, with 377 new listings over the last 24 hours. We need this trend to continue because we are in a very low inventory position. We closed 2,100 homes in February, 2,943 in March. So we did see a nice increase in March. But again, it's low numbers because we just don't have inventory to sell. So low inventory, fewer sales. Even with this inventory bump, we only have 1.2 months of inventory on the shelf. So we're still in a very low inventory position. This is a strong seller's market. Some key dates coming up here. More good news this week. CPI and PPI, which is consumer and wholesale inflation reports, they both came in lower than expected. The wholesale report, actually, the month to month was negative. So that's really great news. As this good news continues to pile up, the Fed has more and more data to hopefully halt the rate hikes. The market's saying, we think we're going to have one more rate hike at a quarter point, and it'll be potentially this month or next month in May. We'll see how that plays out. This news, along with the jump in listings, is certainly good news for buyers out there. The Personal Consumption Expenditure Index report, PCE, this is the Fed's favorite inflation measure. That is the last report that they're going to get before their May meeting. So fingers crossed that it comes in favorable as we're seeing everything else. So a Connecticut real estate market summary. Active inventory for single family, multifamilies, condos up 175 units week over week. That sounds great, and we really want to see that continue, but we are still in a very low inventory position, and we've been kind of flat over the last month, so we really want to see this trend continue. Interest rates are creeping down, and inflation seems to be moderating, dare I say, possibly even reversing. Hopefully that continues. So what does this mean for the Connecticut market? Home prices, as I said last week, they're up 4.75% March of 2022 to March of 2023. So we are continuing to see prices go up when it was forecasted to be flat or down. As interest rates drop and more inventory comes on the market, what we're seeing is buyers who had either left the market or are new to the market are coming in, increasing competition. So that inventory to buyer ratio is doing this. More buyers, same, maybe a little bit more inventory. If you're sitting on the sideline waiting for prices to drop, they're continuing to trend up. And I don't see them changing. It's not going down. Don't try to convince yourself of what you want the market to be. Look at the market as it is. The Connecticut real estate market is a strong seller's market with very low inventory and relatively high buyer demand. The downward trending mortgage rates, are bringing more buyers into the market, so making that demand higher. Foreclosure rates on the supply side are still very low. So we need more listings and we need more construction in order to fix the supply problem that we have. Home prices are steadily climbing because of the supply and demand dynamic going on, and multiple offers, they're still very common. The bottom line here is the market dynamic that I just discussed is going to continue until there is balance between buyers and sellers. And we're not there right now. We have a very strong seller's market. Moving on to the primary mortgage market survey, you can see that we're down to 6.27 from 6.28 last week. So, it's slightly down, pretty much flat. Mortgage rates are continuing to ease overall in the downward trend due to the relatively good news on inflation, on jobs, on spending, and certainly the plans that are being stated by the Fed for the future. Consumer and wholesale inflation numbers this week were definitely good news, and as the market digests them, I do expect rates to continue to come down. We're looking forward to more good news for that PCE report at the end of April. so that when the Fed meets in the beginning of May, they're able to either halt rates or at least only raise it this one last time and say that's it. Let's hope for the best. That's what I have for today. Comments and questions are always appreciated. Have a great weekend.